Hello? Mkwai. Kuna hapa tuleta tu ana live hapa.
Okay, I'll trade any face guys.
Okay. Hello. Hi, guys. Yeah, can you hear me? Hi. Hi, Sid. Yeah, so let's hope we are okay. Let's hope we are all fine. Okay. I don't know how many people. I don't know, Mr. Sid, do you have a trading account already with you? Okay. So let's us to join, although they're recommending WhatsApp, but WhatsApp, we'll go with the. Hey, gold is selling, eh? You see, I told you gold is a sell. You see that? Have you seen that? Eh? It's a sell. You would have seen the structure is so clear. Structure is clear. Okay. So let's go to MT5. Let's go to MT5 now. Let me use this one, which is free. Okay. Good morning once more. Let me share this other screen. This one is just one. But let me share this other screen. Let me use this other one. Okay, let me use this one. Okay. Let's hope we are trading. I just want to show you analysis, right? How to analyze the market. For those who have joined, I want you to know how to analyze the market. Okay. So people wondering, what is this business all about? So you need to understand what this business is all about, what we do, what is Forex trading, and then how we analyze as traders in terms of Forex. So the first thing we do, if you see, you need to identify a structure of the market. You need to identify a clear structure of the market. What is the market structure? How is the structure of the market, right? So once you understand structure, that's when you can make your money. So let's go to structure. Let's try to analyze a few pairs. So let's analyze few pairs. So the first pair we're going to analyze is crash 900. So crash 900. The first rule when it comes to trading, let me remove all these indicators so at least you see clearly. Let me remove the indicators, you see clearly. Okay, let's remove indicators so at least we run with pure price action. Okay, so The first rule when you're trading Forex, you need to understand the trend. So if we look at Crash 900 right now, you can't just use one time frame to say, okay, one time frame, I'm comfortable with one time frame. I know the direction of the no. What you do, you catch a falling knife. So what you do, you go to a higher time frame. I'll give an example. It can be a daily. Okay, it can be daily. You can use daily. Example, you can use daily. So daily time frame, you know to say you have to mark the first rule. You have to mark the supply zones. So here, let's just go on a higher level, on a higher level like here. There was supply this zone. The market had an aggressive sell. That's why if you see there was this movement where the market went down up to this point. And then from this point, the market again pushed all the way up to this point on supply zone. And then again, the market, we believe the market is going down on crash 900. That's how the situation is. Because what we expect when the market reaches supply zone, it needs to react at that zone and push the market down. So once you understand direction, but then you know how the market flow. The market flow in a manner that it makes higher highs. So like all this, if you see this movement, all this was just internal structure. All this was just internal structure. Here, it makes this flow here. Again, it makes this flow here. Again, it pushes another high up to that point here. Okay, makes the high up to this point. Again, it comes down up to this level. Again, you can see the structural movement of the market, and really you can see to say, okay, at this point there was it was down at this point. I'm sure you can see there was a downward movement at this point, which created an impulsive movement up to here, right? And then there was an aggressive buy up to this point. Let's not consider what is happening inside up to this point. It took out this high, which is 20.0439. It was taken out. Then once the 20.09 was taken out, the 20.09 was taken out. Okay, it was taken out up to this point. And then the market came down here, and there was a change of, it made an M pattern here, and there was a change of character. It dropped up to this level. If you see, there was also a break at this point. I don't know if you are able to see. So what we expect is that the market should follow in the same manner. Obviously, we all know how the market moves. It makes lower highs, lower highs. It doesn't move smoothly. It has to make sure those emotional traders they suffer. So as a result, what we do on this Crash 900, so for now we have identified the only thing we'll look for in Crash 900, we are going to look for selling opportunities. Once you mark your levels, once you understand the situation currently, so we not say, okay, currently the market should sell. We can't buy, we can only sell in these markets, right? We can only sell, we can't buy, we can never buy. So in Crash 900, we're looking for selling opportunities. So you have shifted your mind here to say, okay, in Crash 900, what we look for are just selling opportunities. So as a result, you're going to zoom to a smaller time frame like M15. So in M15, what you're going to look for are just the retracement up, and then we sell. Retracement up, then we sell. That's what we're going to look for. So what we do when we are trading this, what we do initially, we shall mark these levels like from this swing low. This is a swing low, right? To this swing high. This swing high, where there was a change of character. So you will mark these two levels, the 196.67 and 21172. You see, Forex is very enjoyable. So then what we do at this particular time, we'll stretch this up to, okay, so at this particular time, what we'll do is simple, right? We'll stretch from the swing low to a swing high here. This is where our swing high is, right? So we know to say our entry should at least at a discount, especially when you're using a higher time frame. So already the mind is set to say in Crash 900, we look for selling opportunities, because we know to say our discount region is between 50 to 100%. So we have to see a retracement whereby the market pushes all the way up it retraces all the way maybe up to in that region, and then we should expect a drop in market to that point. I don't know if we're clear. We are seeing that. Those who don't understand, make sure you join a masterclass. Those who don't understand, you can join a masterclass. But this is what I'm showing you. They're just like basic principles of trading. These are just too basic. So once you understand the structure, and then what you do, those guys who do smart money concept. So what they do, those guys who do smart money concept, they try to look now for uh, imbalances in the market to say, okay, at this point, I'm seeing this imbalance whereby the market made the gap, needs to be filled and all that. Like for instance, here, those the wicks according to trading, wicks should be meeting, wicks should be leaking. They like here, if you see here, there was the wicks they met. So wicks should be meeting. Okay, there should be closure of those gaps. There shouldn't be any gap which should be left. So here, if you see, there is this gap which is here. Okay, this gap which is here. Try to see clearly. I don't know if you're able to see. There's this gap. Yeah, I don't know if it has been filled. This gap. Then there's this, there was it filled up. There's this gap here. I'm seeing a gap here. So I'm expecting this market to come and make maybe a triple top, which to come and touch again to tap in the demand, the supply zone. Once it taps in the supply zone, then we expect a fall again. So currently, what we have to look for now, we are clear on crash 900. There is no way we can look for uh, buying opportunities. Here, we look for selling opportunities. So once the opportunity for sale presents itself, that's when we strike a sell. So we'll go to M15 here. So M15, it's aligning with a lower time frame. It's selling, it's dropping. That's it. We know to say here at this particular time, we need to keep on selling. So now the next arrangement, once we are clear on crash 900, so crash 900, for instance, we are clear to say we only look for selling opportunities. We can't buy in such a market. So we forget about that one. The second one will go to crash 600, crash 600. I think I haven't given this signal, but the signal is that at least at this particular point. So let's send the signal while we are doing live trading session. Okay, let's do. Okay, uh, yeah. So let's go. Okay, okay. Let's go. Let's go. To crash 600. So crash 600, I gave a signal before we analyze. This is the signal. Before we analyze, this is the signal. Okay. Uh, okay. So let's go. Let's go. Crash 900. Let's look at crash 900. So crash 900, we'll go to a higher time frame like M15. We'll go to higher time frame like M15. So we can tell this one, there's this demand area. If you check on crash 900, 600, there's this demand area at 227112. And then we expect this market again to slightly go up and take out that high. I don't know if we're able to see that arrangement. So on crash 600, we only look for buying opportunities. So here, what we need to do is that we need just to see the shift of structure. The market should come and take out this high, which is 23242. Should come and take out this high. Then that's when now we'll confirm to say, no, this market will go up. But for me, I make sure I take my entries early because we need to do an early entry. Okay, an early entry as low as M15. When we go as low as M15, that's when we do an entry and that's when we make our money. So right now, we know to say it's on a demand zone. We need to buy. So let's send a signal now for buy. So those who are ready, they can buy. Those who have got real accounts will buy. So buy crash 600 and ensure you put your stop loss just below there. If it goes the other side, it simply means that we have to wait again to it taps into that zone. So 22879. So 22879. That's our entry point, 22879. You can mark 22879. Mark that level, and then we'll just put our stop loss just below, which is 830. Let's put our stop loss at 22830. Put your stop loss at 22830. 22830. That's where we. Okay, 22830. So let's 228. Okay, let's just put 228880. So at least we don't miss the entry, right? 22880. Then stop loss is 2830. So let's do that. Let's do that. You can do the entry into that one. 22830. Okay, our entry is 22830. So it's 22830 by 50 points. So 22930. Again here, 22980. Then 2230 930. Okay. Then again 230 80. Again 230 130. So we'll do an entry at this level. I'm sure we are all seeing that. Let's enter with yeah. Okay. I'm sure we are seeing that. Have you entered in that? So this is the signal we are saying. We enter into that signal. That's the signal. Let's enter into that signal. Enter into crash 600. Enter in crash 600, guys. Enter in crash 600. Even if it retraces, make sure your risk management is on point as well. Risk only 2% of your money. Okay. It's I'm failing to type. Okay. Let's reduce some. Okay, yeah. You can enter into that. Just enter in that. You know the maximum profit you put at 3130. So this is where we'll put our take profit. This is where we'll put our take profit. Okay, that's why we'll put our take profits. Yeah. I don't know if it's making sense. I don't know if it's making sense. Those who are participating, you can put emojis. I don't know if it's making sense. Yeah, I don't know if it's making sense. Yeah. Okay, I don't know. Is it making sense or it's a long story, guys? Is it making sense or it's a wrong story? We're doing live signals. We're doing live signals. We're doing live trading signals. Okay. We're doing live trading signals right now. We're doing live trading signals. I don't know if we're making sense. Guys, you can confirm. Is it making sense? Yeah. So guys, that's how we trade. Yeah, so these are real financial markets. They are not these are real financial. Although what we are trading right now, it's synthetic indices. They are not real markets per se. They just mimics the real financial markets. So they just follow through the real financial markets. It's more like it's just an algorithm running. But when you trade gold, that's a real financial market, right? These synthetics are not affected by any fundamentals. So it's just a program, a program running, a computer program thing running, but mimicking the real financial markets. But obviously, these guys, they have been in the market or in the industry for quite some time, like from 1999 up to date. They have been in the market. So at least even the platforms are a lot of platforms we use. So guys, I don't know if there's any clarity on what we are discussing or what I'm showing you right now, because I want by the end of the day we make money together as a team. Okay, we make money together as a team. Okay, let's do this. Okay, I don't know. Are we together? I don't know if we are together. So I shouldn't just surprise you. I know you guys have seen we have brought this account to this match. So just try to check. This is just a small, very small, it's a baby account. So this baby account I started already with actually I started with the $5, took it to binary 2027, and this is the account. Just a small account. But by the end of the day, my projection each will give me $76 in profit. So 5 plus 5, that's $11. So it's pushing up. The market is pushing up. Okay, I think this entry, I've shown you the entry, you guys. You have seen the entry, and people are making money. Okay. Yeah, God is ringing. Forget about it. Okay. Yeah, yeah. So let's see. Let's see. We push. Yeah, crash 900. Let's wait and see. Yeah, is it making sense, guys? Those participating in the live trading session, is it making sense? Okay, wonderful. Yeah. So even those who have accounts, you can be seeing the signals, the way I'm taking the trades. Okay, the way I'm taking the trades. So what you put, even this RSI, it works well. It's a momentum indicator, but I also use indicators. I use indicators sometimes. I draw the zones. I draw my key zones, key levels. Once I draw my key levels, then I wait for market to reach my key level. Then I enter a buy or a sell. It depends where the market comes. If it reaches my key level, that's when I enter. And I always look for discount price. I don't trade premium price, I trade discount price because this is a business by the end of the day. So you as a businessman, if you take it as a video game, it's up to you. If you take it as a video game, then it to surprise you. But if you take this as a business, that's when you understand to say it's a business, and as a business, you always want the best price, not so. So because you need the best price, you need to make sure you take the best price ever, so at least you make your money. That's how trading flows. So that's why even this oversold of both conditions, they're okay. They're okay as long as you are trading within the trend. Yeah. I don't know if there's any clarity. If you need any question, you can ask in the comment section there. Then I can handle it, of course. Yeah. Yeah. So at least, guys, I've given you a signal. You trade that signal, make your money. You tell me, and already I've posted in our community the trades. So otherwise, thank you very much. Let me just now go eat my breakfast. I relax as I'm watching the trades. Thank you.